Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend, all. Ira Epstein of Linn & Associates with your metals market update for this end of the month, end of the week on September 29th, 2017. And we're after the close, so I'm not going to worry about that. But let's talk about what we do have going on. As you look at these markets right now, a stock market that is normally sees pressure on it in the month of September really didn't happen except for the NASDAQ. Even though it's up here, the others went for highs. That market didn't. Metals had a terrible month. It's really simple. They lost dramatically on the month. You'll see shortly you're down about $70 from your peak price. The dollar index has come up. The other currencies have started to drift down a little bit. And the market, of course, is still trying to get over the North Korean tensions, which it seems to have done. I keep writing in my newsletter, if you get that the lifespan now of North Korean tensions just keeps getting shorter and shorter, a day or two, and that's about it. That's not to say if they don't knock something down, if they don't have an errant missile that strikes something, that the whole thing won't explode in your face. But the war, the verbiage war, doesn't seem to do it anymore. When you go to a monthly bar chart, all that happened to gold over the past, let's call it the past 6 months, is the market's gone up, went to the green line, which is the 100-month moving average of closes at 1329.50, exceeded it, got up to as high as 1358.50 this month, just missed the upper Bollinger Band, and now is settling back with support waiting for the market around 1263.90. Momentum did not change, so I'm going to say that the bias is still up on the monthly chart. I'm going to say that the market is sitting here trying to figure out what to do, and that 1260 area is probably a support zone. When we go to a weekly area chart of closes, you went from 1209.70 to 1358.50 and right back now to 1281.50, roughly that $70 loss area that you see. But there's nothing on this chart that says it's ready to fall apart either. When you go to a weekly bar chart, it's gone right from the peak straight down. It didn't make a pattern of higher lows or lower highs, lower lows. Didn't do any of that. It just backed off in the chart. And when we put the swing line on it, 1280.30 was the key number, and it was taken out. You got to 1277. So on the weekly chart, you're trendless. You have a higher high and now a lower low, neutral. The 18-week moving average of closes comes right in here at 1275. So I'm looking, as a market analyst, for something between that number and on the monthly chart, that 1263, to see where the support in the market comes in. I think we're knocking on the door of it. That doesn't mean I'm bullish. It means I think that those that have their run to the downside might find it very difficult to get much more out of the market. Let's assume the market closes under the 18-week moving average. Maybe it drifts down to 1235.40 on the weekly chart. The problem is the monthly chart still got that support, and traders do look at that. Momentum is turned down, so you don't want to ever fight momentum. Momentum often turns before price. That has turned down. So I'm going to say the bias is up. The momentum is down, the trend is out of the market, and you have a nothing gold market going on right now. And that's where I'd leave it. When we come to the GLD ETF, the large one, you can see that you got as low as 121.59. Unlike what gold futures did, you haven't taken out a previous low. You still have the pattern of higher lows, higher highs. Again, if you're trying to get long over upper Bollinger Bands and think you're going to get a lot of duration out of that, I wish you the best. The odds are you won't. The algorithm is built so that 95% of the time the market will trade with bands. And yes, the bands adjust to price, but you've got to think of them as resistance and support. That does not mean you're running out there and you're going to be a hero. I'm going to buy it down here to go long. I'm going to sell it down there to go short. I can show you people right here that went short, they're still short, they're still short. That's a big move. That is not how you use them. It's one thing to come out of a market. It's another thing to understand how a study works, and you put the parts of the puzzle together. In this chart, momentum is down, the trend is up, and the bias is up. It's a bit different. When we come to GDX, this is even still a stronger looking chart. Yes, stronger than the other two, because you got to drop quite a ways to break the pattern. Higher lows, higher highs. Momentum is down. That's fighting the market. Bias, well, you closed today at 22.96. The 18-week moving average is 22.95. Let's say that you're right on it. I am expecting a battleground right now at that 18-week average as this market sees if it can get its footing under it or not. Let's assume it doesn't, and it gets through 22.02. So then I'd be looking for 2100 potential, but you're still not in a trend. It's easier to stay in the uptrend because you'd have to take that out. If the market just takes out today's, well, not today's, this week's high without taking out 2202, you could have a market that re-enters the uptrend. So you look to see what the probabilities are. In the silver chart, the low of the week was 1664. It broke through 1671.5, so you lost the uptrend. Now, I can show you last week what you did. This market was fighting its battle right there, and it came down to the 100-week average, the 18-week average, but momentum had turned itself down, and momentum was against the market. This week, momentum's continuing down. You came through this area of 1671.50, and like the gold, you are just neutral in this chart at this point in time. There's nothing there. In the copper market suddenly got life in it. Now, momentum had been what we call locked into bullishness. It lost that. Often when it's lost, markets make a run to the 18-week moving average. Does it have to? It doesn't, but that is still what's there. No matter how this market looks, and it does have higher lows and higher highs, it's hard for me to like to get involved in markets that don't have momentum on their side. So I consider this market, the bulls have control right now, but if the market takes out 287.50, watch out. You're probably going back to 281.78. I need to see the momentum shift to the upside. In the platinum, momentum is pointing down. Prices have a higher high, higher low. There's no trend. The bias is down and momentum is down. There's no reason to be long. Is there a reason to be short? Not if you're not trending. In the palladium market, this market is also void of trend. Now, the daily chart in this one turned bullish, not the weekly, but you have a pattern of a higher high and a lower low. The market has still got downside momentum. It has got upside bias. If you want to talk a mess, the metal markets, in my opinion, are a mess. It's that simple. If we look at the weekly bar chart on the dollar index, momentum turning up. And if you notice, the market did close over a 20 level. You've got the trend up, but the bias down. Where do you think the market might go? Well, if it continues higher, I'm going to guess the 18-week average, which is going to drop down from 94, let's call it 12, to a lower number. It's been averaging a drop, as you can see, of about 25 points each week. I don't know that that'll stop, so it's probably going to be in the 93.80 level. It's just a guess off the top of my head. You put that together, you come up with a game plan, and unfortunately for metal traders, just not anything there that on the longer term charts that looks real good. Now here's something that I want to bring up. I know a lot of you have taken advantage of the offer. Congratulations. But we get new viewers because you bring them to us all the time, and we appreciate that. They may want to get Modern Trader magazine. The October issue is already out. We'll make sure that you get that. And these are the type of articles. This month, it's the gold plays in there. Let's assume you're dealing in Amazon stock. It's talking about the industries. Obviously, for stock traders, there's ETFs, there's option plays, earnings, Forex plays that you might be interested in doing from there. Then they back that up with another group of interesting stories, such as this, Techniques and Tactics. And it talks about how to trade in different ways. Very important for the trader. I look at this every month, and I'm sure you should be taking a look at it as well. And, of course, then their regular articles come in. They mix it up with something that sometimes offbeat and very, very interesting. This is what their stories look like, and I think they're fascinating. Great graphs with it, great stories, how to play with the markets. It teaches you what to do. I'm just showing you the commodities because I'm a commodity broker. It's got it for the options and everything else. And then you get Modern Trader Daily Market Focus, a daily email that talks about the events of the day, what's going on, what's moving the markets. It's all free, $79 value from us. Go to our phone number. You can call. You can go to our website. Just go there. You'll see a carousel of free offers. Choose what you'd like. Click up here. You can always do that if you're watching me on YouTube or underneath us. It says click here for Ira's free offers on many of the websites these videos get posted on. I'm Ira. You have a great week. And by the way, it's Yom Kippur, the Jewish holiday. It starts tonight, ends tomorrow. To all of you, Happy New Year. Take care, everyone.